Our lead story tonight is about global markets. They're witnessing a tug-of-war. India's Dalal Street versus Hong Kong's Hang Seng. They're going head-to-head. And what's the prize? The title of the world's fourth largest stock market. That's what they're fighting for. The biggest market is the US, followed by China and Japan, and today India took the fourth spot. It went past Hong Kong. It was a fantastic start to the day, to what turned out to be a roller coaster of a day. If you're an investor, you know what I'm talking about. And you have our sympathies. It was a rough day, yes. Indian markets saw a lot of volatility. The day's trade opened in the green but ended in the red. The Sensex crashed by over 1,000 points, the Nifty by over 300. And Hong Kong saw the opposite today. Since last week, it has been falling. But today, Beijing promised an intervention. So the Hong Kong stock market, the Hang Seng, gained almost 3%. Although this may not last. Officials in Hong Kong remain nervous, so much so that they made a rare admission today. It came from this man, John Lee, the chief executive of Hong Kong. He's not optimistic about the markets.
I must say that market sentiment is rather sensitive these days. So I hope that everyone will closely monitor the markets and act with caution. Government departments will closely monitor changes in the markets.
The market sentiment is sensitive in Hong Kong, he says. In India, that's not the case, though. The Indian stock market is leveling up. Like I said, it has beaten Hong Kong. India's Dalal Street is bigger than Hong Kong's. And this is an important milestone for India and Indian corporates. This is also a reflection on Hong Kong. It used to be Asia's biggest financial hub. But that's not the case anymore. India is poised to replace them. Despite today's correction, major investors remain bullish on India. Look at the global rankings. These are the world's biggest stock markets. The United States sits at the top. It is worth over $50 trillion, 50 trillion, followed by China. These are stocks listed in the mainland. They're worth $8.4 trillion. At number 3 is Japan with $6.63 trillion. And India now ranks number 4. Hong Kong has slipped to number 5. India's markets are worth $4.33 trillion. Hong Kong is at $4.29 trillion. It's not a small it is a small difference rather. But in the coming days, it's expected to widen because the mood is changing. Global investors are making long-term bets. I'll give you an example. Major sovereign wealth funds and public pension schemes are picking India over China. Last year, a think tank conducted a survey. It reached out to 100 funds. Their assets are worth $26 trillion. And they were asked where they would like to invest. Most of them picked India. Then came Brazil and China. Around 40 funds had a positive outlook for India. In 2023, overseas funds made big investments. They poured $20 billion into Indian stocks. So what is attracting them to India? Steady growth. That's what we've seen in the past 8 years. Indian stock markets have delivered gains and profits for 8 straight years. Indian corporates have grown on the back of steady economic policies, policy reforms, and a largely stable political environment. All of this has made India the growth engine for the world. And those are not my words. This is the assessment of the IMF, the International Monetary Fund. The IMF says India, and I'm quoting, is a star performer. The momentum is expected to continue in 2024. This is the IMF projection. It expects India to be a top performer this year as well and to account for more than 16% of global growth. And there is no doubt, when India grows, Indian corporates will benefit too, which explains the bullish outlook. Plus, there's one more factor, the decline of Hong Kong. It makes India a more appealing option. Hong Kong stocks are depreciating. There is a rapid decline. We talked about this yesterday too. The Hang Seng seesawed today. The index closed in the green, rising almost 3%. But over the past 5 days, it has plunged by more than 400 points. And Beijing is trying to steady it. The Chinese premier spoke about this today. His name is Li Qiang, and he's unhappy. He wants the Hong Kong market to stabilize. Today, he called for, quote-unquote, forceful measures. There is talk of a stimulus package. Reports say Beijing is preparing this package worth around $278 billion. The money will be used to make investments to stabilize the overall market. So So India may have gotten ahead, but it cannot rest on its laurels because China is fighting back.